Stocks ending the week higher, the Dow, S&P, and NASDAQ gaining slightly after the Supreme Court struck down Trump tariffs. This coming in the tail of fresh economic data. The GDP number showing growth slowed sharply at the end of last year, while PCE inflation came in slightly hotter than expected. Joining me now to make sense of it all is Morgan Stanley Wealth Management CIO Lisa Shalett. Lisa, thanks for coming on the show. Good to see you again.
Yeah, my pleasure.
So the big news on Friday, of course, the Supreme Court decision that said Trump's tariffs are illegal. But the president quickly responded by announcing he'd levy a 10% across-the-board tariff under a separate authority. Where does all this leave the markets?
Well, I think at the end of the day, the companies that were most affected by tariffs do have the ability to litigate. We believe that the liability for the U.S. government could be as high as $170 billion that would have to be returned. Again, that would, play out over a period of time. But at the end of the day, I think the president, as we know, is extraordinarily committed to this strategy. He's committed to the revenue collection. And so I think at the end of the day, markets are going to do what they did today, which is shrug it off.
Yeah, that's what it seems like. Before this all came out, you had identified in a report earlier this month that you saw inflation as a slightly bigger risk in 2026 than sort of market consensus. Does this change that at all? And whether it does or not, what's behind your thesis there?
Well, fundamentally, we think it's going to take time for the tariffs to actually trickle through to the supply chain. If you look at imported goods prices, they actually have been trending upwards. Aggregate CPI data, on the other hand, has been flattered by very constructive developments in the housing market, where we're seeing lower rent prices. Very constructive developments, obviously, out of the energy sector and lower oil prices. Those have been, big helps to CPI overall. But our best guess is that as we go through and work our way through 2026, the impact of tariffs to consumer prices are going to get passed through. And that, in many cases, is because the expectations for corporate margins are quite ambitious. And we think companies are going to have to pass them through. Whereas in 2025, we think that there was a certain amount of uncertainty and companies ate those tariffs and those costs.
Yeah, that $170 billion is probably not going to go to lower prices. I want to ask you about something else you've been writing about. We've all been talking about it, right? Is the AI alleged threat to software stocks and others. In fact, you might say people have been freaking out about this. You said, I want to quote your words here, that some of this is exceptionally irrational. Why do you feel that way?
Well, look, I think anytime you see these knee-jerk, wholehearted, sector rotation moves where, you're throwing the baby out with all the bathwater, I always get concerned. Is there some truth in the rotation out of software stocks? Yes, I think that there are a set of software-based models that are going to come under threat. Remember how extraordinary a lot of these software companies have had it over the last 10 to 15 years. They've built these business models built on platforms, software, networking effects, where the marginal cost of adding a new user is literally zero. And they've been able to, create seat-based, what I call seat-based subscriber models. And they've literally minted money and been able to deliver, 55 to 65% operating margins. It's extraordinary. Some of those business models are going to be threatened, and those margins are going to go away, as will some of the seat counts. As software engineers are replaced. But there are many software providers that are deeply embedded in enterprises on a multi-year, multi-decade basis. They are the arbiters of data. They're the arbiters of cybersecurity in many cases, and they are the arbiter of cloud storage services. And so I think, this idea of the baby in the bathwater creates opportunities for stock pickers.
We're just about out of time. Can you give us one baby? What's your favorite baby?
So we never like to pick stocks, but look, Microsoft is down 25%. That's probably a little excessive.
All righty. Lisa, you also like overseas stocks. Next time you come on, we'll talk about that.
Absolutely.
Have a good weekend. Great to see you.